Okay, so we've all seen the headlines about Florida's real estate market just booming over the last few years. But, beneath that sunny surface, a perfect storm is brewing. And in this explainer, we're going to break down a crisis that goes way, way beyond a simple market cool down.
So what's the first huge red flag that something is seriously wrong here? Well, it all starts with one single pretty alarming statistic that tells us the entire dynamic between buyers and sellers has just completely flipped on its head.
And that's the number, 9.7. That's how many months of housing supply South Florida has on the market right now. Now, what that actually means is if no new homes were listed for sale, starting today, it would take almost a full year to sell everything that's currently for sale. That is a massive, massive amount of inventory. Just to give you some perspective, a healthy seller's market, somewhere like Milwaukee, has just 2.7 months of supply. So Florida's 9.7 months, that's the highest of all 50 major U.S. metros. The market hasn't just cooled off, it's completely inverted. All the power has shifted into the hands of buyers.
But here's the thing. This isn't just about simple supply and demand. The crucial point here is that this is a crisis driven by multiple things, all converging at once. It's a perfect storm. And the first, most fundamental piece of this storm is something that hits every single homeowner: the insurance nightmare.
This right here is the structural problem that's shaking the very foundation of the Florida real estate market. I mean, forget mortgages for a second. The cost of simply insuring a home in paradise has become totally unsustainable for a lot of people.
And the scale of this problem is just staggering. Premiums have jumped by a third in just 3 years. We're talking about homeowners now facing annual bills over $10,000. It got so bad that private insurance companies literally fled the state, forcing the state-backed plan Citizens Insurance to become the largest insurer, absorbing 1.4 million policies at its peak.
And here's the really nasty catch. The state tried to reduce its own risk with what they call a depopulation program. But it's a forced choice for homeowners. So imagine getting an offer from a private insurer that's almost 20% more expensive than what you're paying now. Well, under this program, you have to take it. You literally lose the option to stay with the cheaper, state-backed plan.
On top of those crazy high premiums, there's another hidden cost that a lot of people moving to Florida have no idea about: the hurricane deductible. And this is not your normal deductible. No. This is a huge, separate amount that's calculated as a percentage of your home's total insured value.
So let's look at the real-world impact. If you have $1 million home, you, the owner, are personally on the hook for the first $20,000 to $50,000 of damage for every single hurricane. That level of financial risk is just becoming a breaking point for so many people.
Now you take that insurance crisis and you pile another one right on top of it. This one is hitting the condo market particularly hard. A shockwave from a tragic event a few years ago is now causing immense financial pain for condo owners all across the state.
You can really trace the chain reaction here. After the absolutely horrific Surfside Tower collapse, Florida understandably passed strict new safety regulations. The thing is, now older buildings need these really expensive inspections, and they have to have fully funded reserves, which is money a lot of them just never set aside. And this is causing HOA fees to skyrocket and these massive special assessments that can cost owners tens of thousands of dollars out of the blue.
The effect on the market, it's been immediate and it's been brutal. I mean, year-over-year condo sales have just plummeted. We're talking over 20% in key areas. You've got owners desperately trying to sell to escape these new costs, but buyers are staying away. It's creating this market that's just flooded with people who feel completely trapped.
So, what happens when you combine an insurance crisis with a condo crisis? Well, that great Florida migration that defined the pandemic, it doesn't just stop, it actually reverses. That river of people moving in has turned into an exodus of people trying to get out.
So where are they all going? Well, nearly half of the mortgage applicants leaving Florida are heading to more affordable states like Georgia, North Carolina, and Tennessee. They're cashing out, and sometimes they're even taking a loss just to escape these rising costs.
And if that wasn't enough, there's another huge problem just looming on the horizon. 16,000. That's the number of new apartment units set to hit the Miami-Fort Lauderdale market in 2025. All of this brand new supply is coming online at the exact moment that demand is drying up, which, is a perfect recipe for falling rents and property values.
Look, the crucial point is that all of the unique factors that fueled that boom are now working in reverse. You've got high interest rates sidelining buyers. Companies are calling workers back to the office. And all that speculative tech and crypto money that flooded Miami, it's moved on. And the result? Sales are down and inventory is just piling up everywhere. So what does all this add up to? Well, experts are calling it a market reckoning, and they're all stressing that this is fundamentally different and in some ways a lot more dangerous than the crash we all saw back in 2008.
Think about it like this. The 2008 crash was basically a financial crisis. It was caused by bad loans. Once the banking system got stabilized, the market could eventually recover. But today's problem? It's structural. It's being driven by the real-world escalating costs of insurance and climate risk, and that is a problem you just can't fix by lowering interest rates. So, what are the experts forecasting? Well, Nick Gurley from Revenger app, who analyzes this data really closely, is predicting that some of the most overheated Florida markets could see some pretty significant price drops of around 10% all through 2025.
And where exactly is this pain expected to be felt the most? Well, you're looking at markets like Tampa and Naples at high risk for a 10% drop. But others, like the Space Coast and Gainesville, are at very high risk. We're talking potential drops of up to 15%. And these aren't just little fringe markets. These are major Florida population centers.
Ultimately, this is really what it all boils down to. For decades, the true cost of living in a place with significant climate risk, it just wasn't fully reflected in the price of real estate. But now, through the insurance market, that risk is finally being priced in. And that's a factor that is permanent. It's not going away. And that leaves all of us with a fundamental question for the future of the state. For millions of people, Florida represented this affordable, sunny paradise. But as all these costs continue to spiral, potential buyers and even current owners are being forced to ask a really tough question. Is that dream still worth it?